Welcome to the Stage Analysis Members Weekend video. It's Sunday, the 25th of September 2022. I'm going to start tonight's video by going through the key market breadth charts, as I think it's something I haven't done at the start of the video for a while. So obviously the people that are non-members watching get a sample of what the market breadth section is all about. And then before getting on to the regular weekend content after that, which will be obviously for the members only. So starting off with the major market breadth charts tonight. So this is the percentage of stocks above their 50-day, 150-day and 200-day moving averages in the NYSE and the NASDAQ combined chart. So it covers a large proportion of the US market, I think 6,000 or 7,000 stocks worth. So it's a really good proxy of what's going on in the market, and it's my version of Stan Weinstein's stages survey, where he looks at what stocks are in stages 1 and stages 2. As this tracks it in a fairly similar way. It's obviously not the same approach of doing it, but it gives you a similar result in terms of the look and feel of it, and it's made up of a 0 to 100% scale. So we're looking at the short term, the medium term, and the long term all together combined. So at the moment, we've finished this week on one of the lowest levels we've been on for a while, at only 14.74% here, which is another drop of minus 12.47% this week, in last week. So we're way down in the lower zone now. So how I do this chart is that you can do stage analysis on this chart. So between 0 and 40% is what I consider the stage 4 zone. The 40 to 60% zone is the neutral zone. So it's either stage 1 or stage 3, depending on which way you're approaching it from. And the 60% to 100% level is the stage 2 zone. So at the moment we're below 40%. We're at 14.74%, as I said. So we're deep in the stage 4 zone, which we've been in for quite a while. Year to date, the vast majority of the year to date trading has been below this 40% level. As you can see, we've had since back around here, you can see the vast majority of the price action has actually happened with the majority of stocks below their 50-day, their 150-day and 200-day moving averages this year, which obviously has been a stage 4 environment for the vast majority of that period. So we had a few brief upticks out of it. How this chart works is, if I zoom in on this a little bit, you can see, so we have a 50-day moving average in the middle here, and this grey dotted line is the 20-day moving average. So how I do it is I use it, one, for, as I just said, about the stages between obviously 0 to 40%, 40 to 60%, and 60% to 100% as the different zones for what stage it's in. But also you can determine the environment and then give it a status based on where it is in the chart. So you can see here when it's below the 50-day moving average here, so when we're below this red 50-day moving average, this is what I consider a difficult environment. And when we're above the red 50-day moving average here, it's what we'll consider a positive environment. And when it's in between low, you get periods where it actually drops below the 20-day moving average and the 50-day moving average, but still above one or the other. Then that's when it becomes a neutral environment. So I do these statuses each week in the watch list. So not the watch list, in obviously the blog post I do for the market breadth here. So I tell the status, whether it's a difficult environment, a positive environment, what zone it's in, and then we can obviously work on strategy based on that as well. I use my own approximation of the Dorsey Wright playbook that they use for the bullish percent index. So it's a very similar approach, and I find it very useful. So at the moment, as I said, we're right down in the lower zone, in the stage 4 zone. We're a long way below that 50-day moving average. So if I scroll down, as I said in the post, this is the full members post of this, which obviously non-members won't see the full bit. They only see the first part of the post with the point and figure chart of it. So they don't get the extra markup. So one thing that I wanted to show this week was the 20-year chart of this, as obviously we've got back down to an extreme level again. So if we look down here, you can see the 20-year chart goes all the way back to, well, it's more than 20 years, goes back to 2001. So which puts the current level into perspective compared to other previous stage 4 declines. So you can see back here, this is our current level here, coming across back through the years. So back in 2002, you've got the 2008 into early 2009 period. You've got the 2011 stage 4 decline. got the 2015 into early 2016, got that late 2018, late 2018 into early 19, and then the March April 2020, and then this year, of course, where we've dropped below. So you can see it's quite a rare level. We only get down to this either at previous near to the bottom, or in 2008's case, we had a good 6 months below the current level. So that puts it into perspective a little bit. The vast majority of the times it has a brief move down lower than the current level and then flips back up. And obviously from the second time below, it tends to be quite near to a bottom. So potentially, unless the market is going to turn into a major recession and we're going to have another major crisis like we did in 2008, then obviously probabilities are that we could put in a near-term bottom soon. So, but obviously if things do deteriorate considerably, and as you can see from the 2008 period, it can hold down below this level for a long time, and things obviously got a lot uglier during that period. It was a good 6 months from when it got lower than this level until it started to move back out again, and we got that strong signal in March 2009 there. So obviously which way it goes, no one knows at this point. Also in the members post, I do, as I said, I do a little bit of a strategy based on where it is. So as I said, it's based on the Dorsey Wright playbook for the bullish percent index, but I do my own little spin on it from a stage analysis perspective. So using the point and figure chart determines whether you're on defense or offense. When you're in the column of O's, you're on defense. When you're in the column of X's, you're on offense. And then we've got the point, you say what the point of figure bet status is, which at the moment, because we had a double bottom breakdown on Monday, is we're back to bear confirmed status again, which at the moment we're on a low long exposure with high cash level. At this point, when you're in the lower zone, it's the strategy tactics are for wider stocks on the stronger RS stocks, still holding those, but then reducing the defensive posture as you're starting to get to extremes. And you could obviously, there's a chance of a spring type action, short covering rallies, so you want to potentially reduce the defensive posture but obviously still be defensive, so and trim and take profits in shorts, etc., with tighter buy stops on short positions. So a few other things, obviously you can use ETFs to start getting back in via the major indexes or sectors if you're looking for an easy way to build back up exposure again as the market starts to potentially go for a bounce again. But we're not there yet at the moment. As I said, we're on defense, we're on a point and figure bear confirmed, and we're in a difficult environment, so in the stage 4 zone. So until we start seeing some short-term turnaround, then obviously it's very much a cautious defensive approach with a high cash level. So, but just to be on alert for bullish signs of a short covering rally, as that could obviously erupt, and then obviously anything really hugely beaten down could suddenly rally strongly. So obviously your areas like your tech stocks, your semiconductors and software stocks, anything like that tends to rally hard on the short covering moves. So you obviously at that point don't want to be holding the more defensive areas, as you suddenly get strong rotation out of them back into the more risk adverse areas of the market. So for the members, I also post the data each time. So this highlights when it's about percent above the 20-day moving average and percent above the 50-day moving average here. So you can see this has been on red for a little while now. So since the end of August here, we've basically been on a difficult environment status again. So this is the 20 and 50-day oscillator. So the distance from the 20-day moving average on that first chart that I showed, and this is the distance from the 50-day. So you can see it's below the 20% level at the moment. We're actually at 22.88% below the 50-day moving average. So we're hitting an extreme level in here. You can see if we go back across the chart here, there's only a few periods where it's actually got lower than this. Again, what's that? October 2018, and then we went below during that February, March 2020 time there. So it can get more extreme to the downside here. So, but at the moment, in terms of near-term swings, it's actually a lower level than the vast majority of other near-term swing lows. And then I go on and have the broken down data for the individual NASDAQ and the NYSE as well. So right, let's come out of that into the next one. Short term, we've also got the Nasdaq percentage of stocks above the 20-day moving average here, which has got down into the lower zone. So we've only got 7.76% of the Nasdaq stocks are above their 20-day exponential moving averages here. So as I said previously, this is around 3 to 3,500 stocks, I believe it tracks. So it's a good proxy of what's going on in half of the market at least. If we look at the NYSE, which covers the majority of the other half, then this is down to 3.33%. So really extreme levels, as you can see. Hasn't been this low in the year to date. So we're hitting a new low year to date here, but it can get down to these levels and stay in the lower zone. As I've said previously, in order to get a buy signal on this short-term indicator with the market breadth, we need to see a move back through this key 30% level, and not just on the single chart. It needs to happen on all of the charts. So the Nasdaq Composite, the NYSE, the S&P 500, and the small caps all at the same time. If it only happens on one, then it's not a strong enough signal. We want to see it all four of them, or five, even if you count you look at some of the smaller types like the Nasdaq 100 as well, and then you want to see a strong thrust back through the middle range, back through the 50% level and beyond, to give you a short-term buy signal basically on this measure. Small caps also really low, 2.67% above their 20-day moving average, and the S&P 500 is down to 2.4%. So we're hitting extremes that we haven't seen in the S&P 500 here since back in the mid-June period when we had the previous swing low. So again, that's why I said in the previous post, there is obviously we're getting to some extremes here in the near term. So there is potential for a short covering rally type move. Whether it follows through into anything bigger or not is obviously a complete unknown. But the risk is that we're obviously extended on the downside. Doesn't mean it can't continue going down and could just have a waterfall move and continue capitulating, as there's definitely some panic setting in. But obviously, if we do get a rally, it obviously could be a strong move, as we're obviously in a deeply oversold area. Bullish percent index, this is the 1 hour chart. So intraday, again, same kind of thing with this. When it's below this 30 bar moving average here, it's on a difficult environment, and when it's above, it's on a positive environment. So again, this is a really good, if you're swing trading, this is a really good way to identify whether you should be obviously on the long side or the short side. In my opinion, it really helps both of them together, the Nasdaq Composite and the NYSE, when both of them match up, as we got back here. So you can see this is, let me scroll up a little bit here, get the inspector. So when we started breaking down again on the 15th, or even the 14th into the 15th there. Once you started breaking down on the 15th into the 16th, then obviously pushed us back onto a difficult environment again, which is obviously a negative. Means obviously favouring the short side and obviously avoiding breakouts. So until this the moving average here starts to catch up, the moving average starts to catch up and this starts to bust back above again, and we get it on again. You want to see it on both, not just a single chart. Then obviously that's when we start to get interested again on the long side, as this is obviously a short-term measure. Longer term measure of the bullish percent index, looking at it on a weekly time frame, going back to 2018 here, you can see we've popped back into the lower zone, similar times to where we were back in late 2018 and the 2020 low area. So you can see we've been in this area 3 or 4 times during this year. So it's a different animal to what those two were. And actually, if we take this back, I think we can go back quite far on this. Let's see what we get in terms of the actual long term. So in terms of the amount of time spent below, we're obviously getting into the 2007, 2008 time where it actually went below it multiple times. So whereas other ones have tended to have only short periods below and then come back out again. So this is it is a more extreme bear market that we're having at the moment. Nasdaq, same sort of thing. We're into the lower zone now, only 26%. So, and again, we've been in this lower zone below this 40% level. So in stage 4 environment for obviously the majority of this year to date, with only a few brief pops above. So this matches very similarly to what we saw in the percentage of stocks above their 50-day, 150 and 200-day chart combined that I showed at the start. Move on to the advanced decline issues. So this is the NYSE advanced decline. Below this 50-day moving average at the moment, making lower low. So currently we're on a negative signal on this one again. If we look at we get the Nasdaq up as well. See, this is again making lower lows. It's spent the vast majority of the year and obviously part of last year below the 50-day moving average here. So this remains on a negative signal as well. If we look at the crossover, the MA crossovers of the 30 and the 10-day MA crossover here, you can see that's on a negative status as well, crossed over back again here. Same with the Nasdaq, also remains on a negative crossover. So again, negative from those. McClellan oscillator and summation indexes getting down to some lower levels here. You can see actually we're at the most extreme it's been since the 2020 low at the moment. Summation index not as much, but again it is in the lower half below the zero line. So same with the Nasdaq. Again, this is getting down to some lower levels. It did pop down into this level in around February, March 2021 here, but it is lower than it has been in the last year now, and down to the 2020 COVID lows again. So definitely extreme on the downside here at the moment. Again, that gives it obviously risk of a reversal, but until that actually starts reversing, obviously it could continue lower. So don't anticipate and wait for a return in all of these, as we, like I said, always with the stage analysis approach, we're using a weight of evidence approach. Basically, we look at all of the market breadth indicators together. We don't just look at one indicator and make a decision based on that. We look at all of them together and we get a weighted approach. So obviously everything at the moment has been fairly negative. So until we start to see at least some of the short-term measures, which I showed you before, that the 20-day percentage of stocks above their 20-day moving average and the 1 hour bullish percent index start to turn up and start to give some positive signals, till we get those start to turn back to positive again, you won't get any of the other areas on positive as they're longer signals. This is another reasonably short-term signal. If this starts to flip back up again, then potentially that would give you a signal as well. So on the short term, but the vast majority of these are longer term signals. Same with the new high, new lows here. Nasdaq, NYSE 1,106 new lows and only 8 new highs on Friday. So this has hit an extreme level again. We've gone higher than we were in May and June time with this. So starting to look a little bit more negative again. Same with the Nasdaq, not as bad. In the Nasdaq hasn't made quite as many new lows, but more than it did in the June low there, but still below what we saw in May. If we look at the cumulative line, which has been on a negative signal since this early December, so you can see we've been in a stage 4 decline in the cumulative new high, new lows line. Since then, we've started to accelerate to the downside again here. So until this starts to cross back above this 50-day moving average here, then the signal remains on a negative signal for this. And gone back over the years through this, and this does give some reasonable signals for longer term investing. So it is a good one to, if you're more longer term focused. So at the moment this remains on a negative, difficult signal. We look at the 5-day average as well. This continues to be in the lower zone. We only had a brief few pops above the zero line. It hasn't managed to hold above any time. It's continuing to drop to lower levels again. So this remains extremely negative since November, and it's much worse than we saw during the 2020 or the 2018 periods. If I drop this back a bit on the time frame here, you can see it's actually been a much worse stage 4 decline compared to those. So, and then finally on the market breadth this week, I want to show the cumulative point of figure breakouts minus breakdowns in the US market. So this is something that I do as a custom scan each day. So it's the point of figure breakouts, double top breakouts minus the point of figure double bottom breakdowns, and then obviously charted as a cumulative line here with a 20-day and a 50-day moving average. It gives you a very similar look to what you see in like the advanced decline line type chart. So at the moment this had a waterfall move this week. It started off a little bit more slowly, and then towards the end of the week accelerated. We had 600-700 net breakdowns on Thursday, Friday, so each day. So it got worse as the week ended, and actually made a lower low. So potentially, unless this can spring, this has made a stage 4 continuation breakdown. And so until it starts to get back above these moving averages again, this remains on a difficult environment. status